Great. Once again, welcome you all to today's section. Today I'm going to look at for cash flow, question solving on the cash flow. Or cash flow statement. Using one particular question, and another day we'll come through questions. Okay, so let's kickstart the game. That is IAS 7, statement of cash flow. IAS 7. Talk about statement of what? Cash flow. Cash flows. Fine. Now, formerly called cash flow statement. Now, after the revision, she called it statement of cash flow. Previously known as fund flow statement. Fund flow statement. I will get that very know about fund. So no funds, and then let's call it cash. So replace it by cash instead of the fund flow. Let's go into detail and know the concepts. So we're going to use just few minutes to explain the concept behind cash flow and go straight and pick our first question to solve. This is a question solving stage. I believe strongly that probably gone through the principle. If not, can you do so? Now, when you talk about cash flow, as the name suggests, flows. So flow simply means movement, right? So it's a statement prepared to show the cash movement. The cash movement in organization. So just a statement prepared to show what? Cash movement. When you talk about cash movement, that's inflows versus what? Outflows. That is all. Now, why do you prepare statement of cash flow? That's the concept. The concept behind statement of cash flow is what I want to look out for. Now, let me ask this question before I start the concept. Normally helps. Tell me, if profit, accounting profit, is equal to cash? So assuming that the company have reported a profit of 500,000 US dollars for a particular year, does it suggest that the cash balance should also be 500,000 US dollars? Any answer for me? So is profit equal to cash? Okay, I can see big no. I can also see big yes. Big no. No, profit is not equal to cash. Okay. Yes. Before you answer that question, it depends on the accounting concept or the accounting basis that you are using. Under accrual basis, no, a big no. Under accrual basis, profit is never equal to cash. So the answer is what? Big no. Come and pick that. However, under cash basis, I can also use what? Cash basis. So under cash basis, yes, your profits sometimes be equal to the cash and cash basis. Profit and cash, there's no vast difference. I know we prepare the financial statement and accrual basis, so let's follow the accrual basis. So let's go. So no, profit is not equal to cash. Yes, profit is not equal to cash. That's the final answer. Now, if profit is not equal to cash, for instance, if you are the accountant of, let's say, an NGO, or maybe a religious body, churches, let's see something, where you have reported a profit of $500,000, and then they ask you what's the cash balance. Tell the man that it's negative $100,000 that is me owing. He'll tell you what? Upon all the profits, 500,000, our cash balance negative. Good. What caused that? So now to explain this, we need to prepare what you call a cash flow statement. So cash flow statement is just a statement that we prepare to reconcile the difference between profit and what cash. That is all. So cash flow statement is just a statement that we prepare to reconcile the difference between profit and what cash. So if your profit is not equal to your cash, relax. Let's prepare a statement to bring this balance to conclusion. That is all. Let them agree. So that is all. Now, profit is not equal to cash. And we have to prepare cash flow statement to reconcile this difference. Basically, that is all. Now, profit is not equal to cash due to the following reasons. Why is profit not equal to cash? The first reason is due to the fact that there is an accrual basis. Because of the accrual basis accounting. Yeah, because some of the items, the sales, you've not received the money, but the accrual basis will let you add it to your revenue end during the year. Some of the expenses you've not paid for, or you've paid ahead of time, accrual basis will let you less it. So accrual basis will let you report on occurrence of transaction, but not what cash movement. So accrual basis does not report on cash movement. It's based on what occurrence. Once the transaction took place, irrespective of the movement of cash, you should record it. That is one. So any entity or group that is the accrual basis will have this particular challenge. Number 2. In fact, you can talk about what you call non-cash items. Non-cash items. Non-cash what items? Give example: depreciation, impairment, amortization. All this does not affect cash, the cash balance, but it affects your profit. To cause the difference. Although this is a subject of accrual. Number 3, that you can talk also. Now, another accrual, you can also add a prepayment to it. So number 3 will be capital expenditure. Capital expenditure. Capital expenditure. For instance, during the year, all the profits that you earn, but you use all the money to acquire PPE. You've acquired PPE. Now, when you acquire PPE, profit will not be affected. Yes, but your cash will go down. Probably you pay by cash. So when you acquire PPE, profit is intact, but your cash flow goes down. Capital expenditure. Okay, add more. Repayment of what? Loan. So capital expenditures and debt. Issuing of debt and repayment of debt. If you have a loan and you repay part, your cash will go down, but it will not affect your profit. If you go for additional loan, your profit will not be affected, but your cash will go up. Okay. So basically, this is the causes of the difference. Now, I'll challenge you to know the importance of cash flow statement. Why do we prepare cash flow statement? That's very important to reconcile the difference between cash and what profit. Good. and add the remainder to it. That is all. Now, for the purpose of cash flow, all the organization's activity have been grouped into what? 3 perspectives. All the organization's activity are grouped into 3. Let's look at it. We have 1, the operating activities. So we call the activities or the perspectives. So operating activities. Then we have what you call investing activities. Now this is advanced model, so I'll go into detail. Then we have financing activities. So I don't think the cash flow that I want to prepare is a summation of these 3 items. That is all. So if I put cash flow for operating activity, cash flow from investing, cash flow from financing, I'll get a total cash flow for the year. So this becomes total cash flow for the year. Now, it is your duty, not even your duty, they've done it already, to know items that goes under operating activities. What are examples of operating activities? So that in exams, they are going to scatter a lot of activity and present it on a company's financial statement. So you have to recast them, rearrange them, all operating activity one side, all investing one side, all financing one side. Finally, put them together. That is all. Then after putting them together, if you add opening balance of the cash and cash equivalent at the start, so cash balance brought down. When I add it to my cash flow for the year, it will give us cash balance carried down as the cash balance at the end of the piece. That is all. Now we are going to look at something here. When you talk about operating activities, it talks about funds, or it talks about cash movement within the core purpose, your ordinary activity, your core purpose, your core trading. So it talks about the cash movement, about the trading activities of the organization. Okay. So the operating activity basically talks about your core purpose. Now, what are the items that fall under operating activity? Number one, so operating activity. Let's look at the items that fall under operating activity. Number 1, try to examine operating activity. Cash received from what? Customers. Cash received from customers, including cash sales, plus cash or sales. Number 2, we should look out for cash paid to suppliers or cash purchases. Cash paid to suppliers. Number 4, we should look out for operating expenses. Operating expenses. This is operating expenses paid, not incurred. The amount movement. Paid and incurred are not the same. Incurred means it may include what? Non-cash item or owings. Number 5. Tax paid. Now, the number 6 can be either this section or this section. I'll explain why. Number 6 is interest paid. Interest paid. Now, interest paid can be a financial activity or operating activity. I'll explain. This is this. If interest payment form part of your core activity, then kindly add it to your what? Your operating activities. That is all. For instance, financial institutions, usually banks and other service loan companies, interest payments is something that they do daily. So that one becomes what? A core activity. So it must be under operating. However, manufacturing company or any company that it only pay interest if you are going for what? A facility or advance or loan. Such a company, interest payments should be what? Financing. It's a financing activity, not operating activity. Good. But in exams, if you place it anywhere, it's okay. Yeah. Operating or financing. Sometimes the examiner will not declare whether this company is a bank or financial institution. If I'll be using their financial statement, you should be able to identify that this is a financial statement of a bank or a financial institution. Good. Now let's go to investing. Summary. So we are just providing summary. Investing simple. It talks about the opportunities that you took advantage of. That is all. Investing talks about opportunities that you took advantage of. Something that you did not register your business for, but along the line, you took advantage and invested in. Basically, investing is about your non-current assets. That exam is about your non-current assets. That is all. Anything about your non-current assets. So number one, acquisition and disposal of what? PPs. The same thing applies to what? Intangible. Acquisition and disposal of what? Intangible assets. Acquisition and disposal of what? Investment. All of them. Now, if investing is about non-current assets and their income or the other income, any other income received. So other income what? Receive. Other income received. Good. So intangible assets. And then investment, maybe fixed deposits. If you acquire fixed deposits, it's an investment activity. It's an investment. Perfect. Then you can also talk about the other income received. You can also talk about other income received. Basically. Okay. Let's see. Now, other aspects that we need to look out for is other income. Other what? Income. Any of the other income received. So any other income received. So this is number 2, number 3, number 4. Other income received, example, interest, comma, or interest and dividend received. That is all. Interest and dividend received. You see interest and dividend received, they are what? Investing. Except for if you have registered your business to be receiving and paying interest. That one, interest and dividend becomes your operating activity, like quick angels. Quick angels, they will add this to your operating activities. Again, grants, government grants received, IAS 20, government grants. The actual money received should be under what? Investment activity. You did not register your business to receiving grants from the government, not at all. So if the government are giving you a grant, can you put it under what? Investing. Okay, I'm now with investing. So in short, This talks about the P&L section. This talks about the non-current asset and other income. Fine. Let's go to financing. Now, when you go to financing activity, that one talks about how the entity generates enough cash to finance the operating and investing activities. That is all. The entity strategy or the ability to generate enough finance or enough funds to support the core and any opportunity that will come their way. That is all. So basically, it talks about financial activity. Financial activity talks about equity. You can raise long-term finance by equity and what? Debt, non-current liability. That is all. So financing is about these two. So number one, issue of shares. Issue of what? Shares. Number two, acquisition and repayment of loan or debt. If number four, transaction cost or issue cost. If you see issue cost, kindly add it to your financing activity. Number five. Now, the repayment of lease obligation. The repayments or the annual payments according to IFRS 16 leases. IFRS 16 leases. The annual payments, whether arrears or in advance, it falls under what? Financing activity. Take note. However, it does not include the finance cost. The finance cost have its own provision. But here, just the principal repayment. So lease payment. Again, let me go to number 6. If we have issue cost related to what? Shares. Then we have dividend paid. It's a financial activity. Very interesting one. Always you hide it somewhere. The dividend paid. Good. Number 7. Interest paid. Of course. If interest on the loan that you've acquired. Now, if paying of interest is not your routine business operation, then paying interest is your finance cost. So interest paid, it should be another financial activity. That is all. Good. Now we are done with this item. So in summary, before you can prepare a statement of cash flow, you need 3 items. Number 1, you need a P&L, you need the non-current asset, you need equity and non-current liability. And this is the financial position. This is the balance sheet. It means that we need a balance sheet, you need a P&L. So all cash flow questions, the examiner have to give us the P&L or balance sheet. Or in some situation, he will give you the items that you need from the profit and loss and ignore the P&L, the whole P&L, because not every item needs the P&L, only few as compared to the balance sheet. For balance sheet, they have to touch every item line by line. But for P&L, only few. That is all. We are done. Okay. Now, in summary, before I bring my summary to a successful end, I will explain 2 other issues How to deal with cash flow from operating activity and preparation. The standard provides two alternative methods. I will talk about them and give you the format. Second, I'll talk about each of some terms that you need to know under the IAS, such as cash, cash and cash equivalents, and then the composition and how it is calculated. Yes, that's all. So let me go to the next summary before I start my question. So, operating activity, there are two ways to present the cash flow from operating activity. Let's look. Cash flow is an interesting topic. If you are correct in exams, you know. If I'm wrong, you know. Now, with operating activity, there are two methods. We have one, direct method. As the name suggests, direct method. Direct, everything is what? Direct. Here we use what we call direct cash flows. That is all. That one uses direct cash flow. And the format has been provided in a previous lecture video, and as well as what the material. So I'll scan through the format in our material for you to have the direct method. Let's see with the direct method how to write the cash flow. That one is direct cash flows. So number one, you have for cash received from customers, cash paid to suppliers, all inflow, put them in brackets. All outflow, put them in brackets. That is negative outflow payment. All receipts, inflows, let them stand positive. That is all. Cash paid to suppliers. Then you let operating expenses paid, which include admin and selling expenses paid and wages and salary paid. Please, if there's any item which is made up of non-cash item, impairment, and the rest, provisions, ignore. Do not add them to it. Exclude all those items. Then, we call it cash generated from operating activity before interest and tax. Okay, that's a cash flow from operating activity before interest and tax. As usual, if this cash flow before interest and tax, what's the next item? Interest paid and income tax paid. That is all. Then you are done with your operating activity. So this is for the direct method. That one is direct cash flow. That's all. Then we are done. Let's go to method 2. This is not common for the professional exams. The direct method is not common for professional exams. Good. It's common to probably the accounting technicians and other fields. Method number 2, highly recommended. Yeah, is the one that asks professional exams. Indirect method. As the name suggests, indirect method. That one does not use cash flow. That one will pick what we don't like, the profit, and massage the profit. So imagine that if misplaced the key to your house. Look at how you did the last time that you misplaced your key. Look how you did to open that item. You pass the back door or use one of the windows that you know that window have an issue, but nobody knows about it. Good. So indirect method, simple. Bring one of the accounting profits and massage this or adjust this profit to get cash flow. That is the principle. That is the concept behind. Which of the profit do you want? Which of the profit do you have to pick and massage it. Pick profit before tax. Pick profit before tax so much and adjust it or massage the profit well. Adjust this profit. So adjustment. I'll group all adjustments into three. So all have been explained well in the principle base or the previous lecture video. So when you get it, you are fine. The adjustment, if I pick the profit and I want to, with the help of the profit, I should get the cash flow. Then that means that I need to adjust it. The adjustment, only three items. Number one, I am going to adjust for accruals and prepayment. So check the footnote whether there's accruals and prepayment to affect the profit. Number two, I'll check whether there are non-cash items. That one, yes, plenty. Non-cash item. I need to adjust non-cash item. Adjustment, non-cash item. So non-cash item examples. Let's go. Depreciation, almighty. Amortization. Impairment. Another one, provision. Provision. And then the last one that you need to adjust, or the last but one, alien, stranger, or alien. Yes, that's the name. Alien, strangers. You know, cash flow, the activity should be three, right? They are operating, investing, and financing. Okay, they are three. When we take your profit and loss, the profit and loss statement that we prepare, does it have three definitions: operating, investing, financing? No. So that means that profit after tax that we have determined, it contains three profits. So profit coming from operating activities, profit coming from our investing, and profit coming from where? Financing. Good. So our profit and loss account, the profit after tax that we have determined, it's giving us three kind of profit. So in the profit and loss statement, we've not demarcated it. So it means that when you come here, we are interested in operating profit. So any item which is not part of the operating activity, but they are added to operating profit, please take that item out. I call it what? Alien, strangers. Items that they don't fall out of operating activity, and they've added it. All those items, give them one name. They are in the other income. So any item that you see in the other income, please take it off. Other income, adjust it, reverse it. Adjustment simple means you need to reverse. So adjustment, reverse. All the other incomes, for instance, dividend received is part of other income. Investment income is other income. This is the right place under cash flow. So you need to reverse it. So take note. Then item number 4, you adjust for working capital. Adjust for what? Working capital. Let me write it somewhere top. Item number 4, you adjust for working capital. Item number 4, working capital. That is all. So we are done. So this is how the format will look like. Let's go to the. So we start with a profit before tax. Then you start as an adjustment. Here immediately you add up the interest expense. Then you adjust for depreciation and all the other income. You know the examples of other income, which include what? Income from investment, profit on loss on disposal, and then you adjust for changes in working capital and so the rest we are done. So this is the structure that we are going to use. So I'm done with the format. Please, the investing, the other two, investing and who? Number 2, investing and financing, they don't have direct method, they don't have indirect method. So this one, we only have one approach. No direct, no indirect, that of investing. No direct, no indirect. one approach is only the operating activity. So for instance, if the examiner asks you to use direct method and you are not comfortable with direct method, prepare the one that you know. You only get the operating activity wrong. You get the investing and then financing correct, because investing and financing, there's no indirect method. So if you go that, if ask you a different method, can you do? That's all. Now let me go to the final section about some few terms that we need to understand very well before we start the cash flow. If you do have questions, kindly let me have them through the comment section. Item number 1, define cash. Item number 2, cash and cash equivalent. So I'm using, let me do something for you. We have cash, then we have what we call cash equivalent. Cash equivalent. Cash equivalent. And number 3, if I combine them, I'll get cash equivalent. Wow, that's very interesting. Okay, so can you define them for me? They are the terms that I want to use them very well. Cash. Now, what do you? Okay, great. In short, cash just refers to cash on hand and demand deposit. That is all. So just refer to your cash balance. Cash simple means your cash balance and your current account balance. That is all. Current account balance. That's enough cash. So the funds that you have with your cash still plus your current account balance. That's the demand deposit. Cash on hand and demand deposit. That is all. Now let's go to cash. When you mention cash equivalent, sometimes we have instruments. We have instruments or items or transactions. They are not cash as we are talking, but they look like cash. It's like they look alike. As we are talking, they are not cash. No, they are not cash, but they look like cash. How we get it? Now, cash equivalents. Simple means they are short-term cash, short-term assets, or they are short-term, highly liquid. In fact, they are high liquid investments. But I'll take off this section and then provide a definition there, because I put them into features as usual. They are short-term, high liquid investments. So first feature, they are short-term. They are short-term, high liquid investments. Okay, that's feature number 1. Feature number 2, that are readily convertible into known amount of cash without any significant changes in value. Without any significant changes in value. So short-term, high liquid investment that are readily convertible to known amount of cash, to known amount of cash. In short, the last one is without significant changes in value. So without significant changes in value. That's the definition for cash equivalents. Now, their investments. It includes treasury bills, short-term deposits, fixed deposits, but here is short-term. That they are highly liquid, meaning that, in fact, they are close to money. In fact, they are money. And then they are very convertible. If you need it at any point in time, you can liquidate it. At any point in time, you can go for your money. You know, some of the investments, if the maturity date is not due, you can't go for your money. Other than they have to discount it for you. That is not cash equivalent. Okay. Number two, on the last section, very important. That significant changes in value. You can compare to the known amount of cash, $1,000 with you. I'm coming for this, or if I'm converting this $1,000, I have it in the form of treasury bills. I have a treasury bill worth of what, $1,000. And coming for $1,000, if I'm converting it into cash, and to get down, even if you give this 950, there's a significant change in the value. That's not cash and cash equivalent. That's not cash equivalent. I get it. That's all. And that's cash equivalent. Let's look at the composition of cash. So I write them on the frame. When we mention cash and cash equivalent, they are combined words. Cash plus the cash. So cash that you have in your cash bill, when as each of them deposits, which are readily or which are readily on demand. So I compare to the following. So in exams, if you want to calculate the cash, check the following. Check the following. Number one. So maybe you want it at the start. So at start of the year, and then at end. The first item is cash. So you have the cash. If you don't have it, cash. Add bank balance. Bank balance to it. And the cash equivalent. This is the cash. Let the cash equivalent. So cash equivalent, examples of cash equivalent. Short-term process. So short-term investments. Short-term investments. Usually, if you see them at the current assets, if you see investment at the current assets, it's a critical example. But please and please again, if you see investment at the current asset, let the examiner tell you that this is what cash equivalent. They will pass a note like it is highly liquid or readily available, meaning that it's cash and cash equivalent. Again, less bank overdraft. Bank overdraft only. That is all. So you need them for this, that. This is what you mean by cash and cash equivalent at the start or at the end. Take note. Yeah, done. So that notes, I'm done with the summary. I'm now going to pick a full question on each aspect today. Okay, so to go over again, if you are calculating cash and cash equivalent, we start at the year and we are at the end. I mean, here at end and then at the start. This is cash and cash equivalent. We say it's made up of what? Your cash balance plus your bank balance. This 2 is the cash plus any cash equivalent short-term investment that is highly liquid. Less your bank overdraft holding. This one becomes cash and what? Cash equivalent. Overdraft, kindly subtract. That is all. We are done. If you do have a question, kindly ask before we move on to the questions or the actual question for the day. Then at the end of the day, we will scan through other questions too as well. Okay, if there are no questions, then let's quickly look at the question. Let's go straight to question number 11 or so. Good. That is the last question in the material. Last question in the material. That's CFO. Question number 4. As usual, in cash flow, there will be rough. So I'll go straight to the requirements to stimulate my appetite. That will be rough. Rough. Let's read the requirements, additional information, and scan the financial statement. It'll give you financial statement. It'll give you P&L, and it'll give you financial positions. Can we scan through? And it's all. And it's rough. Good. I'll go straight to the requirement. I'll go straight to the requirement. Why? Prepare a statement. A statement of cash flows for the year, in fact, for the company for the year to December 2010. Now, that was IAS 7, statement of what cash flow, to explain the situation to the worried director. To the worried director. To the worried director. B, comment on the cash flow management of the company as reviewed by the statement of cash flow provided by the financial statement. It means we can also use the cash flow to analyze the company's positioning. And then I'll do that. We use the cash flow to analyze whether the company is operating well, operating bad. Look at where the chunk of the money is coming from, where the chunk of the money is pushing to. So no, this company does not have a future. If you look at your cash flow, don't have a future. If I see that you are selling all your assets, you are selling all to the extent that your investing activity is positive, very big positive figure. In fact, I'll tell you, you don't have a future. Because if you should sell all your assets today, which one are you going to use to generate cash flow tomorrow? That is why you don't have a future. That is analysis, using the cash flow to analyze the company's financial statement. And that's a big part of it. Analyze the question. Let's go. Let's go to the footnote. From the top. I can see some top here. The following financial statement relate to 2010 financial year, together with comparable figures for 2009, were submitted by the Chief Finance Officer of Orisio Limited to the Audit Committee for preliminary discussion. before submission to the board of directors for approval. I'll go straight to the footnote. The following supporting information is available. Fine. Item number 1, okay, note 1, an item of plant with a current amount of 480,000 was sold at a loss of 180,000 Ghana cedis during the year. The loss is included in administrative expenses. So this is disposal. Anytime there's disposal, you need 3 items. When there's disposal, you need 3 items. The proceeds, how much they sold it for? The proceeds goes to investing activity as inflow. Number 2, you need the profit on disposal. It goes to where? Operating activity, into bracket, the adjustment, reverse. Because profit on disposal is never the operating activity, or it's not an operating activity. So profit or loss on disposal goes to where? You reverse it from operating activity. So this cash flow point of view. Then number 3, the last one, look for the current amount of the disposed asset. That one, you reverse it, it will help you to calculate acquisition of PPE. And to just help you to do calculation of what? Acquisition of PPE. To know whether they acquired PPE during the year. That is all. So when there's a cash flow and there's disposal, that's all. However, there's not giving these 3 items like at the go. No, maximum of 2. We give you 2. So that you will strike a different look for the other one. For instance, it means that you are okay with IAS 16, how to determine profits on disposal, which is the proceeds minus what? The current amount. Proceeds minus current amount. Good. So if you check this question very well, the current amount is 480. There's a loss of 180,000. So that means what is the proceeds? It's missing. That's most of you will look for the profits. So that is all. I'm down with note 1. Let's go to note 2. Depreciation of 560,000 was charged to cost of sales for the property, plant, and equipment in the year ended 31st December 2010. Fine. So that means depreciation, non-cash items, adjustments, operating activity, reverse. Now, if you have to reverse, it means that if that item they have added, reverse means subtract. If that item they have subtracted it, reverse means add back. Good. Let's go to the next sentence. The company uses the fair value model in IAS 40, investment property. There were no purchases or sale of investment property during the year, meaning that the changes in the investment property go to the financial position. Immediately, the changes. At the start of the year, this 2010, current year 2010, previous year 2009, so opening balance is 800, closing balance is 840. So there's a fair value gain of what? 40,000. So under IAS 40, how do you treat fair value gain? Yeah. According to IAS 40, you treat fair value gain as what? As other income. So it's part of the other income, which needs to be what? Reversed. Because this is not 1, a cash flow, 2, an operating activity. That is all. So it must be what? Reversed. So we will do that. Let's go to the next footnote. Note 3. Loan note was redeemed earlier than agreed in a loan notes agreement. That is incurring a penalty payment of 40,000, which had been charged as part of administrative expenses in the income statement. Good. This is a transaction cost to what? To that of the loan note. So this is a clear example of what? Financing activity, not operating activity. It's an admin. Once they've added it to admin, it means that they have treated as what? As operating activity, which is not true. Because if they are not going for loan or finance, they will not pay this penalty of 40,000. So it relates to what? Financing activity, not operating activity. So what do? Reverse it and send it to operating financing activity. How do you reverse it? That means it has been subtracted from the profit. Yes, penalty charge. Once it adds admin, it has been subtracted from the profit. So to add this 40,000 back to your profit, your operating profit, and rather subtract from financing activity. It ends there. Note 3. Finish. Note 4. Usually, cash flow does not come with a lot of footnotes. No, cash flow don't have plenty footnotes. Few, but it have a lot of workings, a lot of adjustments. The adjustments are straightforward. Only one working. Let's see, note 4. There was an issue of shares for cash on July 2010. On 15 December 2010, some shares in the treasury were also issued for cash consideration. There were no bonus issue of shares during the year. Now, if there's no bonus issue, don't worry yourself. Just go to the financial position. All this in the share capital is by cash and add it to financing activity. So, shareholders fund, stated capital as 1,200. At the end of the year, is what? 3,000. So, meaning that they issue 1,800. So, that 1,800, all of them is by cash. However, if this note is not there, then we cannot mention or determine that for all the changes is about cash flow. It can happen that if you make a bonus issue during the year, if there's a bonus issue, bonus issue does not come with what? Cash. So if there's a bonus issue, kindly take up the bonus issue first before the remaining balance we present it. So let's assume that, the numbers mentioned that there's a bonus issue of, let's say, 1,000 Ghana cedis, just 1,000 cedis. How are you going to treat this? Now, it means that not all the increment was as a result of cash. Yeah. The stated capital has increased by what? 1,800. Not all this 1,800 by way of what? Cash, because there was a bonus issue. And thank God the bonus issue, the value is what? 1,000 Ghana cedis. So that means the actual cash that came in is what? 800. Take note of this. That is all. The next note. Note 5. The company gives 12-month warranty on some of the products that are going to IAS 37 provision and IFRS 15 revenue. The amount shown in the current liability as warranty provision are an accurate assessment based on past experience of the amount claims likely to be made in respect of the warranty after next year. Warranty costs are included in the cost of sales. So, let's go. Now, provision. Warranty is a provision. All provisions are non-cash items. Let's reverse it. That is all. And provision is the movement which was included. Provision is the movement. So go to the financial position, check the movement. So that's increased by what? 200. So this 200 is non-cash. Can you reverse it? That is all. It ends there. Can you do what? Reverse it. It's non-cash. That is all. Then let's go to the next footnote. Note 6. The only movement in the retained earnings during the year ended 31st December 2010 were the end profits and dividend payments. And by this note, the standard should have had somewhere whether this note is in or not. Please, you should be able to determine the dividend or balance the dividend, and we'll do that. If you have gone through the previous lecture video, the dividend were straightforward given to us in the question. But this one, there's no dividend. You have to calculate by yourself. How do you calculate dividend? If you go, there's dividend in the question, there's not giving the dividend, thank God and move on. If there's no dividend in the question, please and please again. If there's no dividend in the question, you need to perform this. If there's no dividend in the question, can you perform this work to determine the dividend paid? Tell the examiner that in the retained earnings calculation, bring the retained earnings, pull up the retained earnings. Retained earnings is made up of what? Opening balance, that's the balance brought down. The opening balance, so much. Add your profit after tax to it. Leave a space. Leave what? A space. And write the closing balance here. So that's the balance carried down. So much. Now add this to this and compare the closing balance. If they are not the same, then the difference represents what? It represents the dividend paid. So it's a balancing figure. The balancing figure between what? Opening balance of the retained earnings together with the profit after tax and then this. Or you can also look at this. You take the closing balance, so much, any item that they have added, kindly subtract, reverse it. Take the closing balance, so much, tell the examiner. Less what? The following item. Less the opening balance. Less the profit after tax. If there's any figure, that is the dividend pay balancing figure. Any of them, you are free to go. That is all. So take note. So in this, even if you want to calculate the dividend, it will be like this. So the retained earnings. Retained earnings is here. Opening balance 2,620. Closing balance 2,880. And how do you get a profit for the year? This is a profit for the year. Pick the current one, 560. That is all. You are done. Getting the figures. Great. What if there was transfer in the question? There was what? Transfer. Transfer from, if there is a transfer in the question, record it accordingly. For instance, there are so many types of transfer. I'll give you one. One is, let's say, bonus shares. If there's a bonus shares in the question, then before you bring the closing balance, and you record the bonus shares. So record all the items. So bonus issue, if there's a bonus issue. No bonus issue will reduce the retained earnings because the company is paying out of their retained earnings. Another transfer, we have what we call transfer of excess depreciation. So transfer of excess depreciation. Excess depreciation. That one is a positive transfer. Come and add. I know that they leave one line and write a closing balance here. Try and balance it. If there's no balance, the balance represents what? Dividend. So dividend comes here in bracket dividend. That's the balancing figure. Perfect. So there's a transfer, you just need to adjust it small. Okay. Okay, let's move on to the next footnote. Now, note 7 is that capital represent the value of ordinary shares issued at what? 3rd or 6th per share. We don't need those notes. Or then note 6, note 7. Whether they are in or they are not there does not make a difference. But if note 6 is not there, then it means that always have to confirm and check by yourself. Let's go to note 8. During the preliminary discussion of the financial statement, one of the directors expressed dissatisfaction with the cash position. He did not understand why, in spite of profit of 560,000, let's confirm. Profit of 560,000, why are you? Perfect. Profit of 560,000, please. The cash position worsened from positive balance of 100,000 in December 2009 to a deficit of 420. He suspects embezzlement on part of the chief finance officer. This one is very common, especially if it's an NGO or where the head does not have accounting background. If the CEO does not have any accounting background and go and report this to the CEO, you not accept it. All going to ask you, meaning that where is the money? Where the money pass? That's all. That's the language they understand. Apart from money, no any other language. But we accountants, we understand that language that money cannot be the same as your profit, so they are different. So you tell the dissatisfied director that relax. You know, profit is not equal to cash because this profit of 560 that you are seeing here, a lot of issues which does not affect the cash has gone inside. An example could be the repayment of the loan. We pay the loan. The loan will redeem earlier than agreed. To go to the financial position, there's a loan of 800,000 here. And at the end of the day, it's cash, meaning you paid everything. So tell the annoying director that please, this payment, 800,000, we pay with cash, we didn't pay with profit. So our profits were not affected. The profit did not change in respect of this payment. However, our cash, because we use cash to pay, our cash go down. That is why we are reporting a net cash balance or a negative balance of 420, which has worsened here, having 420. So that is it. That is the explanation. Even by this point for the examiner, you are fine. If you check, you can't have any issue, rely on non-cash item. And that's all. Okay. That examiner, even though we should plant, but then looking at the amount of the loan, it's quite huge. That's all. Now we are on the footnotes. When they are comfortably the financial statement, please, in the cash flow question, let me tell you the item that you need. In situation where the examiner provide over, you don't find yourself in big trouble. Number one, you need P&L. If you don't give the P&L, they have to give you some few items in the P&L, like in the form of footnotes. Or the profit made of this, depreciation, this is that, that's all. Item number 2 you need. Please, the P&L we need for only current year. Only current year. Only for current year. If I'm preparing for 2010, I need P&L for 2010. If they are giving me 2009, it is irrelevant to me. You don't need to touch anything in there. So for P&L, if they are giving me 2009, it is irrelevant. Don't touch anything in that figure. Sorry, in that statement. It becomes irrelevant. So take note of that. When you go to the financial position, it must, I need 2 years. I need the current year and previous year so that I'll be able to what? Adjust, find the movement, because we said cash flow deals about cash movement. So movement means the difference between the current and the previous year. That is all. So let's go and scan through. We are doing this so that you have confidence about the question that you are solving. So that if you don't touch any figure, you still have them. Now, you can see 2010 and 2009. There's income statement. You don't need to touch any figure in 2009 for the income statement. If you touch it, off track. Definitely off track, because all these figures, they are not balances. They are consumption during the year. That's what they say for the year. It's for that particular year. It's not a balance. It's a financial position. That one is a balance. That one we need balances after these 2 periods. So we are going to limit ourselves to only items in the current year. Okay, so let's start. Always if you scan through this, the other income. I can see income from investment property as a rental income. Reverse it. Is this one added back? Income from what? Investment property added back. Meaning that that's a rental income. So added back. But if they are subtracted, add back. If they are added, subtract. So what we do is in our cash flow statement, we are going to subtract because they are added. Gain from fair valuation, I'll subtract. The income from investment property, that one can go and add it to investment activity. If you rent half of your premises, probably by way of investment property, it's an investment activity, not an operating activity. So all these two need to be reversed. Distribution to admin are not touched. Finance sources there. Income of there. Let's go to the financial position. On current asset, check PP. PP, check. Open balance is what 3,720. Upon the disposal, it has increased. That's an issue. Let me explain this. If you go to the footnote, the first footnote there's a disposal of what PP. Now, when there's a disposal of PP, can you confirm and check the full calculation of acquisition? In a footnote, we sometimes or most of them will give you disposal. When you do the calculation work, you realize that there's what? Acquisition. Because it is not possible for you to have an open balance of 3,720 and dispose some and still have more than 3,000. It can't be possible. Yes, it can't be possible. So in short, definitely there is what? Acquisition of BP. Go and calculate this. That is all. And that one I'll give you only 5 to 6 items that goes in there. Look for them, and that's all. We move on. In fact, cash flow is just a formula. We just plug in, and then you are done. Investment property, you talk about it. That the movement, the changes is the 40 that you see here. That's the 40 that you see here. Good. Current assets, inventory goes to the changes in working capital. So receivable, the same thing. Bank. This bank balance, open balance is It's a positive, but the closing balance, there's nothing defined. Let me show this one, talk about this capital schedule. A schedule has increased and added. And this happened again in 2017 May. That was the schedule. So that the examiner edited just this question and then released this. Revaluation reserves, I like that. He didn't mention anything. Have you seen the movement? Check the movement of the revaluation reserve. At the start is 100 and end is 300. It means that through the year, they had a revaluation gain of what? 200. If you're calculating the DP, don't forget to add it to it. That is all. You are done. Retained earnings is for dividend calculation. If they don't give it to you. But if I'm giving you dividend in the question and I'm giving you profit, that is profit before tax or the profit that you need, then don't touch the retained earnings. One, if they're giving you dividend. Two, they've given you the profit that you need. Then three, don't touch the retained earnings. Now, they paid. I started seeing that earnings dash. They paid all. The end of the day, it becomes what? It's an outflow. If I tax, we need to calculate tax paid. Trade payable, we use that one to calculate for the exchange working capital. Bank overdraft, cash and cash equivalent, warranty provision, and the current tax payable. That is for discount through. And let's start the actual game. Okay, so now let's actually provide solution to this. First of all, I will mark the board into Q. So I'll start the name of the company as usual, the three protocols. Now, the three protocol, the name of the company as usual. The name of the company is what? Oforicio Limited. So, as usual. Oforicio Limited. Can you confirm? Okay. Then you start. You tell the examiner. You are buying statement of what? Cash flow. So statement of cash flows for the year ended 31st December 2010. Now the reporting currency for cash flow purposes can be designed to be two. So design it to be two. It's not like this. Check whether you are reporting in thousands. So you can check whether we are reporting in thousands. Yes, we are reporting in thousands of Ghanaian cities. Ghana cities. Okay. So we are reporting in Ghanaian cities. In fact, just don't mark it as well. Let me read here. So first, Ghanaian cities. As it means that they copy the same thing, don't change anything. One should also be here. Two currency. If you end here, you have scored yourself 3 ticks already before the actual game. So before any surgery, there must be painkillers, right? Good. Now, where do you start from? cash flow have three perspectives. Start with the very first one. Now here we are using the indirect method. So let's start. The first item on the list is cash flow from operating activities. So write cash flow from operating activities by no shortcut. So I'll write operating activities. So cash flow from operating activities. Underline it. And that. The first item, we start at the operating activities. There are two types. We have the direct and what? Indirect. We are going to use indirect. If you go to the exams, kindly use the indirect method. With the direct method, let them ask you first before you do it. Even if they ask you direct and you have no idea, don't worry. Just do the indirect for them. The investing and financing, you score it in the intact. The only issue is operating. And then the answers will be the same. Good. Now, for the indirect method, we start from one of the profit. Start from profit before tax. Yes, profit before tax. I'll start. Profit before tax. Before tax. So go to the question. Locate wherever the profit before taxes and bring it. Usually go to the tax section, the profit immediately before the tax. So this is the profit before tax. Thank God, the examiner have given it to us already. It is what? 880. So profit before tax is 880. Can you record it here? Immediately, please, you don't rest. Immediately, don't rest. Add back the finance cost. Immediately, add the finance cost to it. Immediately, please don't rest. Add the finance cost to it. Let's go. What is the finance cost? It is 100. We are picking items in the current year, not 2009. Finance cost is 100. Immediately add it to it. So immediately I'm adding finance cost 100. It will give us 980. Immediately call it profit before interest and tax. This is profit before interest and what? Tax. Oh, then the tax. Then why can't we start from the profit before interest and tax straightforward? Don't worry. You can go ahead and start from there, but don't forget that you lose 6. That's here the standards. This is the format provided by what? IAS 7. Not because your exam question is too difficult. Right? You change the format. Those you update. So kindly pick it as it is. And your third examiner, I am going to adjust or massage this profit for adjustment. So adjustment for the first item that should come into mind, the non-cash item. I'm going to adjust for non-cash item. Depreciation. The first item, depreciation. So let's go. Depreciation. All right. No matter what, there must be depreciation. So check for depreciation, check for impairment, check for amortization. That is all. All this in the same category. Thank God, this examiner is very good. He gave us the depreciation. Some of the questions, the depreciation wasn't given, so I calculated it. If you go to the previous lecture video, we've done a lot of them in it. Where I don't give you this, you have to find yourself. So if you're able to solve or go through all the questions solved in the lecture video, like it's a cycle. Each of the other questions have a purpose that you explain. And we've done it. A cycle. To make sure that you're going through all. That is all. Some are just 30 minutes, 45, 1 hour. 2 hours. That is all. Okay, so let's go and get the depreciation from the footnote. No, this is charge. Depreciation of 560 was charged. That is all. So depreciation 560. Then I run my depreciation on 560. That's now depreciation, they have subtracted. So what do you do? We are reversing it. All the adjustment meaning that reverse. Whatever they have added in this profit wrongly, kindly subtract. Whatever they have bought, subtracted from this profit, kindly reverse it, take it from it. That is all. How we get it? So depreciation, they have subtracted. So immediately add back to reverse it as if they've not done it. We've picked the profits and we are going to what? Adjust it with 3 items. The 3 items that we are going to adjust, but there are 4. Adjust the number 1 is accrual, number 2 non-cash item, number 3 alien, strangers, number 4 working capital. Don't forget these 3, 4. Then the 4 adjustments. 1 accrual. Please, one question will not contain all these 4. No. Take note. One question will not contain all these 4. But I do have a question which have all the 4. It's called Adam has been solved. So look for the question. Adam limited. Adam, it have all the 4. All the 4 items were in there. So take notes of that. Now from depreciation, you start reversing all the items. If they are giving you the profit, and loss statement, clap for the examiner like this and move on. Because some of the items you can get straightforward, you can get it here. All the other income, go and pick it, reverse it. So income from investment, so we call it investment income. Take it off. Income from what? Investment after 80. I will reverse it because this is a stranger. It is not an operating activity under cash flow, but under because P&L we don't have operating, everything goes. That is why it's like that. So here, third examiner, income from investment, which is 80. They have added, so I'll have to subtract by reversing it. That is all. I'll move on to the next item. I can see gain from fair value 40. I need to reverse it. It's not part. So this 40, I have to reverse it. This is what non-cash. If the fair value has increased, that is such that somebody have given you money. No money. So this is non-cash item. This is non-cash, which needs to be what? Reverse. This is not even different from depreciation and what? Impairment. The same thing. So let's take it off. So fair value gain on investment property. And then the price was 40. Again, they have what? Added. So what do? We have to reverse it by what? Subtracting. So 40, we are reversing it. Now let's go to the next item. Now when you check to your P&L and you are done with all the items that you can boldly, or that is like you can externally see items that you can externally see them. Fine, that one you are done because we can externally see these two. But internally, some of the items we can't see it. So first thing, an item of land, the current amount of 480,000 sold at a loss of 180,000. So there's a loss. So how have they treated a loss? That means the examiner said the loss is included in admin expenses. That's the accounting treatment. This loss needs to be reversed. It is not an operating activity. So let's go and reverse the loss. Loss of 180. So the examiner, loss on disposal. Now, if it's a gain, they have had a loss, meaning they've subtracted from this profit. So meaning I have to add back. So I'm adding 180 back. Let's continue the game. Then you look for the proceeds. So when we go to the investment activity, I'll look for the proceeds and gain. Let's continue the game. From there, we move on to note 3. They said loan notes were redeemed earlier than agreed in a loan agreement, and this incurring a penalty of 40,000, which has been charged to what? Part of the administrative expense, which is not true. It needs to be reversed. How do you reverse it? This has been subtracted from the profit, so to add back. This is not an operating activity. Penalty on loans, no, it's a financial activity. So let's go and reverse it. Let's examine a penalty. Let's examine a penalty. Need to be reversed. 40,000. They have subtracted it, so let's add back. Again, let's continue the game. Let's go to the footnote. That's the last item to be treated. The provision, the warranty provision. The warranty. So the warranty, just check the movement. That's all. Check the movement in warranty. Let's go to the provision. So warranty provision, it was 200. Now it has moved to 400. So meaning that it was increased by 200. And you know, increase in provisions is an expense. And this expense is an expense without any cash movement. So it's non-cash item. All provisions are non-cash item except for they are what specialized. All provision, any provision at all is non-cash item. All provision, they are non-cash item. That is all. So 200. So tell examiner provision for warranty or warranty provision. So warranty provision to bracket 400 less 200. The answer is what? 200. Now they have subtracted because that's increased. So we are adding back. Perfect. The next item on the list is come through and see whether you can with everything. Check whether there are grants. If there's a grant, reverse it. IAS 20 grants. Item number 3. If there is environmental provision, you are a provision. Every provision. Environmental provision. Provision for dismantle cost. Provision for bad debt. Any provision at all, please don't forget. We can't give you 2 provisions, no. We are done with the adjustments. We are done with the first phase of the adjustments. Let's go to number 4, working capital. Let's go and adjust working capital. That one, if you do it well, you have 10 solid ticks. 10 ticks over there, you do it well. Yes, it can be 10 ticks, so don't, but try away. I'll continue from the next section. Let's go to changes in working capital. You know, the adjustments are for accrual, non-cash, alien or strangers, and working capital. We are done with the first 3 that go to the working capital. That one, I'll hit here. Good. I'll start like this. How you can see from this angle. Let's right here. Let's go up a little bit again. That examiner changes in what? Working capital, no shortcut in exams. Now here there are 3 items. Compare them. Inventory, trade receivable. Please, we want trade receivable, not account receivable. and trade payable. That is all. These are the three items. Compare them. Two things will happen. Either it will increase or decrease. That is all. So increase or decrease. So increase or decrease. Increase or decrease. Increase or decrease. That is all. Now I'll give you a shortcut for this table. For instance, when inventory increases, so let's write increase here and let's write decrease here. When the inventory increases, what does it suggest? At the start of the inventory is 300, at the end is 400. When inventory increases, it suggests that it was an outflow because you have spent money to acquire these goods. So it's an outflow. Then this is outflow. Outflow means put it in bracket. What if inventory level decreases? Oh, when inventory decreases, that is inflow. Meaning that you have made some sale. Good. So that one is positive. That is all. Now, take this shortcut. Whatever is true for inventory is also true for trade receivable because all of them belong to the same family, the same class. They are what? Current assets. So whatever is true for here, so this the same thing. When trade receivable increases, it's an outflow. When it decreases, it's an inflow. That is all. So I don't need to learn for this, learn for that. Just learn one. Learn only one. And then use this shortcut to be over your way. Now, why is this so? Trade receivable, meaning that people that are owing us at the start, they owe us 300, at the end, they owe us 400. It means that we have given them cash, additional cash of 100 in the form of goods. We acquired goods, additional goods of 100, we have paid the person. And we have given these goods on credit to these customers, which suggests that it's what an outflow. If it decreases, maybe from 300 and now that is what 250. So meaning that they pay part of the money. So that one is an inflow. We are done. Now let's go to payable. Now, payable is just an opposite of what receivable. So if receivable increases an outflow, payable becomes a good news, inflow, and here becomes negative, like this. That is all. You don't need to learn everything, just learn the first one and just be correct. Payable, people that we owe. At the start of the year, we owe them 1,000, at the end, we owe them 1,200. If that's a year, they give us a book costing to 200, that we're supposed to give them the money. We are still holding on to the money, but we have enjoyed their goods. When they give us the goods of 200, we're supposed to also exchange the 200 to them. But we held the 200 for trading activity, so it's an inflow to us. They have given us money in the form of goods. That is why at the basic level of accounting, we said the source of finance, one of them is what trade credit, the source of finance. That is all. But if it decreases, maybe to 700, then the guys are forced to pay the money, some balance. So therefore, that one becomes what? An outflow. Perfect. Let's continue again. So kindly check for me. When you start, just check whether it has increased or decreased. But here, I'll provide another shortcut. You will score higher workings here. So let's go. If you go to the inventory, check inventory for me. At the start is 1,620, at the end is 2,440. Means that the inventory has increased over the period. That is all. So all what you have to do is this. Tell the examiner increase in inventory. So right, increase in inventory. Increase in inventory. Open a bracket and perform your workings. Set examiner 2,440 minus 1,620. Put the answer at the first currency. Don't forget to put the answer under the first currency. Okay. So friends online, what do you get after performing the calculation? 2,440 less 1,620. Okay, so what do you get? 820. Now it has increased. If they just write the figure, don't make any decision whether it's inflow or outflow. Just perform the calculation first. When you go this, you go to the changes in working capital. Just find the different, all of them, the three. You get 9. So that takes for doing that. Let's go to receivable. Receivable, I can see 1,080. It has now reduced to 960. So that is a decrease in receivable. Decrease and trade receivable. So trade receivable. Open the bracket. That is 1,080 less 960. What do you get? This table should be part of you, and you need to use red pen to jot the point down. This will give us 1,000. That's 120. Okay. Then go to payable. Everything. The only issue is, can we revisit a question called Harana? Yes. And how we solve this particular question is so fantastic. That section have a lot of adjustments. So can we go there? Payable. Right. Payable. At the start, it is 2,240, and then it's 2,200. So that will increase. The trade examiner increased in trade payable. I hope increase there you can remember, or you will be able to identify that this one has increased or it has reduced. Okay. So it has increased from 2,400 from 2,240 plus 2,240 like this. So that's increased by 160. Okay. When you do this, then you pause. Now elaborate whether which of these will be inflow or outflow. If you leave it like this, in fact, if you leave it like this, you are safe. Even if you can't tell me whether it's outflow or inflow, please, the mere fact that you cannot identify that increase in inventory and outflow does not mean that you cannot perform the workings. So if you do something like this, in essence, you do this before you make a decision whether it's inflow or outflow. Perform the calculation. The inflow or the outflow, leave it later. Because over here, for instance, if I leave it like this, I won't do anything. I will score some, I will lose some. But what I will score will be more than what I will lose if I leave it like this. Even if I don't understand the topic, because for the time I wasn't able to identify whether this is inflow or outflow. So I just perform the calculation there. You score some and lose some. Let's see something here. Now, by you there, you understand. Yes, the one watching the video, you understand. Yes, through this. So we said that increase in inventories was an outflow. So this one should be important. Should be in brackets, sorry. Decrease in receivables means it's an inflow. So this one should be positive. Good news. Increase in payable means it's an inflow. This one should be positive. So it means that if I should have moved on, I'll get only one tick wrong. Plus their total. So out of the 10 ticks, where I don't understand anything, I'm scoring 8 out of 10. Where can you get this? Where you don't understand anything? Yeah, the mere calculation provided there is giving you 8 out of 10. Okay. Now let's sum them up. Minus 820 plus 120 plus the 160. Then let's see the answer. This one gives us 700. Then 600, 540, right? Can you push it here? Push it to the last section, 540. Agreed. Friends online. Now the ticks over here are 10. Don't lose any. 10 solid ticks. What are they? 1, 2, 3, and 3 by 3, 9. Plus the final overall answer, 10. 10 solid ticks. In that now you get 8 out of 10. It's not good. Okay. So cash flow is very important and interesting section. It does not require complex calculation. However, you need to be fast because it have a lot of workings. You need to have a lot of workings. We are done. So can you pick your calculator? Add from immediately the profit before interest and tax like this. Add from here. And then add a 540 to it. For this 540 should be negative because this figure is more than these people, so it should be negative. So can we add and then let me have the answer. Okay, so you get something like 1,300 positive. 1,300. Call this operating cash flow before interest and tax. Operating cash flow before interest and tax. And so operating cash flow before interest and tax. Now the question is this. If this cash flow is before interest and tax, what's the next item? Interest. This one, there's finance cost here. You write interest paid. The last item is interest paid and tax paid. That is all. Now, let's look for the interest paid. However, this interest paid, you can also add to the finance or the financial activity. Perfectly true. Yes, you can also say that cash flow from operating activities before interest and tax is perfectly true. Cash flow from operating activities before interest and tax. Yes. Just that I was looking for a simplest version where you can, write it and go there because I will not be able to go there. Why not? Perfect one. Let's do something here. Let's get covered for the interest paid and tax paid. Anytime you're looking for something paid, the workings are only 2 steps or 3 steps at which you are done from the previous one. Okay. Let's do something. I'm going to claim just here because we have a total there. I'll claim just here. Okay, I think I'll do the workings here. I'm not in here. Right. Now, to get the interest paid, third examiner workings. So have you seen cash flow? We have worked out, not performed any workings. So what about P&L, the financial statement, comprehensive income and financial position? Will it be possible for you to work massively like this without any tangible workings? Yes. That the cash flow is a bit okay. And before you can prepare cash flow well, you should be able to prepare the profit and loss well before the cash flow. That's why I did that one first. What happened is this: After examiner workings, so my workings, number one, interest paid. Anytime you're looking for something paid, don't worry. I'll give you only 3 items that you need. If you put these 3 items together, you are done. Examiner, I am done. The first item on the list, check the open balance of that item. It might be on the balance sheet. Check the financial position. If you check it's not there, that means I don't have any open balance. And closing balance too. That is all. Item number 2, add that item. Add the movement of that item. It's the P&L. Less the closing balance. That is all. So anytime you're looking for something paid in cash flow, 3 items. The open balance of that item, movement of that item coming from the P&L, closing balance of that item less, you are done. So let's use that approach to look for what? Interest paid and tax paid. That is all. Don't worry yourself about complex calculation. No. So I write open balance here. For interest paid, I write open balance. I'm reporting in thousands. And I'll go to the P&L and go and pick what you call the finance cost. Add the movement. Usually it's in the P&L. I'll say less what? The closing balance. So balance carry down. If I do this, any answer that I'll get becomes my what? My interest. Okay, let's go to the balance sheet to pick the open balance. It will be among them. Check, we call it interest payable, interest owing. When I check the clear liability, there's no interest payable here. Then it suggests to us that they are not owing. That's a good news. If they are not owing interest, it means that whatever interest shown as the finance cost has been paid fully. They are not owing. But the balance sheet does not give any balance of interest that they are owing. Both the last year and then the current year. That is all. So in short, it means that the finance cost is the same as what? The interest paid. Or the interest expense is the same as what? The interest paid. In that case, don't you worry yourself to do any calculation. If you go interest on the balance sheet, don't worry yourself with this calculation. Just come and put it in like this. 100 and subtract. Why? If you do here with dash, finance cost is 100. Closing balance dash. So if you perform this workings, dash plus 100 minus dash, give us what? 100. Finance is still the same. You put it there, and then you are done. Let's go to the tax paid. Let's use the same principle. Anything paid, the open balance, that item in the P&L, and less the closing balance. That is all. So let's see something. Let's go. So workings number 2, in fact, it's still workings number 1 because I didn't perform any workings. So it's still workings number 1, tax paid. I like that. Tax what? Paid. Again, now that examiner open balance. My currency in thousands. I'll go to my income tax expense from the P&L. I'm going to pick it. I'll add it. So income tax expense. Income tax expense from the P&L. After the examiner, less what? Balance carry down. That is all. If I do this computation, it gives me tax paid. That is all. So let me go to the financial book. If I go, there's no open balance. I'll put it in the P&L. That's the end of the game. No issue. So let's see. When I go to the financial position, I can see deferred tax here, open opening balance and closing balance. I can also see current tax payable. Why they give me tax too? Okay, so it means that I can group them, open to open, closing to closing. Okay, I'm looking for open. That means I'll pick the current year open, 100, plus the deferred tax open, which is 60. That's 4. So if you go and then the tax systems like this, thank the examiner, they're giving you more things. So add, so it will be 100 plus 60. Let's go 100 plus 60. I open a bracket, that examiner, 100 plus 60. That will give me 160. That's the opening balance. Go to the P&L where we can income tax expense. Income tax expense from the P&L. Why income tax expense yourself? Yes, it's 320,000. Add 320 to it. Again, go and pick the closing balance, and then that's the end of the game. Anytime look for something paid, something received. That is all. What happened is this. What happened? The closing balance will be as follows. I'll pick 300. Again, I'll add 100 to it, making it 400. So that one too, I'll take the examiner. The closing balance is nothing but 300 plus 400. Can you show all the workings? I'm begging you. This one there is God begging. Can you show the workings? That's all. Okay. So if you sum all up, what you get? You get 80, right? So 400, I'm not agree. It's more than 80. Because this and this will give us, it's true, it's 480. In fact, it's 80. I think that. 80 positive. So this we call it tax paid. Tax paid. Good. Now, when I'm taking the tax, we explained that we need, if you are picking anything from the profit and loss, it's just the current year. The previous years are what? Irrelevant. Any figure in the previous year for the income statement, don't touch it. If you touch it, off track. If you touch it, it's off track. So, can you take notes of that? Okay, so let's continue the game. Okay, so on that note, I'll put the 80 here as the tax paid coming from workings number 1. That long time, I'm not doing workings 1. Put it in bracket because paid, we are subtracting. At the end of the day, what is the net cash flow coming from where? Operating activities. As soon as you are down the operating activities and it's correct, but we call it well done. Well done. Before we close the chapter of operating activities, let's count to it to catch everything. We finish before that is left at me. Without it, add 40 without it. No notes without it. I just continue. No. 1, 2 without it. Dividend. Okay, we look for dividend by ourselves. Okay, that's fine. So what the total? So call it net cash flow from where? Operating activity. Let's quickly be wrapping up. Net cash flow from where? From OA. No subtract neither. 1,120. So 1,120. Okay, then relax. Come to the next stage. Cash flow from investing activity. Now, the next one is cash flow from where? Investing activity. Straightforward. investing activity. In fact, as soon as you allow the operating activity, your chance of finishing the question is just like few minutes. As soon as you allow the investment, count yourself blessed. You're done with the question. Yes. The chunk of the workings have to do with what? Operating activity. Because have a lot of issue. So make sure that your operating activity is what? Superb. You have done a lot of workings with us, and then you are fine. Okay. So let's see something here. Investment activity. We are going to check items number 1, non-current assets. Any disposal or purchases about non-current assets. Number 2, check any other income received. That is all about investment activity. If you do this one, we are done. Just do it and then submit it. Perfect. So first item on the list, proceed from disposal. So proceed from where? Disposal. I need to check because I write it at the first currency. So proceed from disposal. Let's go and pick the proceed. Now generally I can claim this as a leader workings. I'll be doing the workings here, okay? So let me claim here and do the workings. I'll be coming here soon. Now when you go to the proceed, there's a note. Note 1. And then what is the proceed here? How much? How do you determine the proceed? Can you work it out? You can tell the examiner like this. To determine the profit or loss on disposal, we need 2 items. Proceeds, so much, less the current amount, so much. The answer gives us profit or loss. And now in this question, they have given us the loss already. So now when they dispose the item, the item current value is 480. You paid $3. There's a loss of 180. So that means what we got? What is the proceed? How much they sell the asset for? How much was the sale value? So that means here is X. What should be the figure? If I subtract 480 from, I'll get minus what? 180. So what is the proceed? What will be the proceed? So that means the proceed is what? 300. They sold it for 300 because if I put 300 here, 300 minus 480 is minus 180. So proceed is what? 300. How do you get the 300? Is the difference between the loss and the current value. That is all. How do you get it? So therefore, proceed. Yeah, you can perform the working. Tell the examiner is 480 less 180, and that will give us 300. Perfect. The second item that we need to look out for is the rental income that they receive. The rental income. This rental, this one they have received it is 80,000. Kindly add. They have received. How sure are you? It's not on the current assets, meaning that the money has been received. So the one that we subtracted here, we need to come and add it here. So income from investment property. So income from investment property, 80. It's a positive figure we are adding. What again? Is there any other income? That's all. The rest is, let's do the heartbeat. We call it acquisition of PPE. Let's go. Acquisition of what? PPE. No examiner will tell you to calculate it, but you have to do it. No examiner will tell you. There's nothing in the question. There's nothing in the footnote that suggests that the report was PP, but you have to test, you have to calculate by yourself. It is an inherent risk or trick, it's come with it. And I gave you a trick to based on it to do this calculation. I have an asset. The total value is what? The asset value is 3720. I sold some, but instead of it reducing, I even sold some, depreciated some. Instead of this value reduce, it's rather increasing. So meaning that I acquired more during the year. That's all. I acquired some of the assets. So let's do the calculation. So third example, acquisition of PP. Now the working is number 2. This working is, it must be part and part of you. It must be what? Part and part of you. I'll write all the items that you need. And don't forget that one question should not bring all these items out. So first, working is number 2. Third examiner. You can acquisition of PP or PP schedule. You can get it from PP schedule. First of all, do this. Start with the opening balance. So got the opening balance in and do the following items. Item number 1. Any item that will affect PP, can you write it? Let's go into the opening balance. Please kindly pick the current amount. In some question, they'll give you accumulated depreciation, they'll give you cost. Please pick the current amount. Don't use the cost. The current amount, the simplest way. This one becomes what? 3,720. So opening balance is 3,720. After recording the opening balance, relax for a while, come back again. Ask yourself the following. Number 1, is there a depreciation charge? The first item, depreciation. And depreciation, by now, we have gotten it already. Depreciation is 560. Depreciation, will it reduce? No, or to increase? In fact, they have subtracted. Let's also subtract it. Depreciation is subtract from the asset value. We don't add. Item number 2. Check whether there's disposal in this question. Whether they sold some of these assets. If yes, can you bring the current amount of the disposed asset? Current amount, not the cost, so not the accumulated depreciation, but what the current amount. Let's go and pick the current amount here. The disposal, the current amount is 480. Sorry. So 480. Kindly subtract because it's a sale. Item number 3. Check. I am listing the common ones. That one you find in most of the questions. And when I'm done, I'll add the ones that are not common. Look for revaluation. If it's a gain, add. If it's a loss, subtract. That is all. How do you know? Check the revaluation reserve or the capital surplus balance. Let's go. Sorry. What's up? No. Good. Now, what happened is this. Check revaluation reserve. There's revaluation reserve here. And it is 100. And it's what? 300. That means there has been a revaluation of what? A gain of 200. So how do you treat this revaluation gain of 200? So that means that's been added. So here's a revaluation gain. And it's 300 minus 100. Please, these small workings are very important. They are necessary. So don't forget to dodge any of them. So item 3, look for revaluation gain. In this question again, if it's a loss, kindly subtract. Here is 200. I'm adding. Item number 4. These ones are half beats. They are not in most of the question. Acquisition of asset on credit. Credit. Acquisition of asset on what? On credit. Credit purchases of assets. That one is in Haruna, May 2017. Question number 3. I see a question 3. Haruna. It's in the previous videos, lecture videos. Yes, there was credit purchase of what? PP. So take note. Item number 5. Check whether there has been a transfer or there has been a lease during the year, increase or additional lease. You know, what is the lease? It comes as the do. Where does the value increase, right? So check for that one. Item number 6. Check for capital expenditure. Any other capital or expenditure incurred during the year. That is all. When you are done with all the items, then you leave the space. Credit purchase of assets, you are adding because they are buying, they've acquired assets on credit. Add it to it. So add any lease additional lease liability during the year. They have entered into a lease transaction and they've acquired assets through lease. Kindly add it. Any capital expenditure. This capital expenditure can be what? Improvements. They have recently upgraded their vehicle or modified their building, and it qualifies under IAS 16. That is all. When you have done the last, leave a space and align it and write the closing balance there. That is all. But because all these are not in the question, I'm about to clean it. So find somewhere to write it. It is not compulsory or by force for the examiner to give you all this in one question. No, please, not at all. For instance, that particular question, I'll try and link the solution to Haruna at the video description section. The Haruna, so when you check there, you will see it there. If you tap on it, you will see the credit pages of what PP. Good, the treatment of it. Let's continue with the game. Now I'm going to clear this one because they are not in the question. If they are not in, don't bring it. Other than I will know where they're coming from. Meaning that you have probably choose the format and point for us. If you're not there, don't bring it. You are bottom what you see. And then you write plenty stuff. So when you are done, leave a 9 space like this and come and write the closing balance here. That examiner, closing balance. Or balance carry down. Go to the question and go and make it. I've seen how we should go by this. Let me say something here. This revaluation reserve is also called capital surplus. So take note when you are doing the changes, the financial statement preparation. Sorry. The opening balance. The opening balance, sorry, the closing balance is 5,760. So 5,760. So now add all this up to this level. If it's not equal to 5,760, the difference represents the acquisition made by cash. It's a balancing figure, which is 2,880. So that examiner, cash purchases, so assets that they acquired through cash, which is 2,880. Please, and please again, always confirm this and be sure If you confirm it's equal to, mean there's no acquisition, you move on with the game. That is all. You move on with the game. So let's go and put it in. Workings number 2. So let's go to our main solution and our investment activity. After the examiner, investment activity. Acquisition of PPE. Workings number W2. And then the figure is what? Acquisition of PPE. So acquisition of PPE. Working is 2. This working is 2. That's 2,2880. Put it in brackets. Why? This is an outflow. They are paying, they are buying assets. So money is moving out. Is that all? Yeah, if that's all, you just summarize it and then push it there. So I think that's all. So I've done this question too. Basically, that's all. Basically. No other item again. If you said everything that okay. Perfect. So we are done. Let's go to the last item. So only 3 items, sometimes 1, sometimes 2 for investing. So can you straight up and then get the net cash flow from investing activity, and let's push it there. So 300 plus this 380. So that should give us something like 80 will go. So that should be 2,500, right? Agree. So 2,500. And can we give it a name? It is called net cash flow from where? From investing activity, IA. Perfect. Then from there, humbly, let's move on to financing to end the game. The business cash flow could be interesting. Yes, could be interesting because it will require a lot of workings, so easy workings, no complex calculation. So far, no IAS, plenty of IAS. Don't forget, they can load it with what IFRS 9 financial instruments. They can load it with leases. They can load it with grants. IAS 16, provision 37. Yes. Okay. Let's continue the game. We are about to end it. I'll take this section away. So, going, in fact, gone. Okay. So yeah, right here, cash flow from where? Financing activity. Financing activity. Online. First thing, I need to check equity and what? Liability, non-current liability, that is all. So that one, if writing the exams on paper base, don't worry. And I'll tell you that first, hold the question paper like this. Good, and scan to the equity and non-current liability, that is all. Let's go. Let's go and scan together. We've done it already, but let's do it again. I can see equity. Stake capital has increased by 1,008. So issue of shares. And we're told that they issue shares for cash. So issue of shares. So tell the examiner, first item on the list, issue of what? Shares. Issue of shares. Into bracket 3,000 and 1,200. I like the working more than the finance. Good. Issue of shares. Okay, so that gives us 1,800. Can you push out the first column? Positive. Continue scanning through the equity items until you are done. Scan through one after the daily ending item on 10. From share capital, we have share of the start. At the start is 0, at the end is 200. So it's an inflow. So share that one is 200 inflow. If we check Haruna, it's in there. Haruna 2 have schedule. So the next item, revaluation reserve, we start it to move on. The next item, dividend. So you copy, but before we copy dividend rate, let's check the straightforward one. Those that does not need any complex calculation. So return earnings, I'm going to use the copy dividend. But me, before I calculate anything complex, I make sure that the easy ones are done it first. So let's go to non-current liability. There's a loan note here. At the start is 800. At the end is that meaning they paid everything, which is an outflow. So repayment of loan. Repayment of loan at 800. Put it in bracket. Continue scanning again. That is all. I left another item in the 40. The 40 that is mistakenly, not mistakenly, the 40 that is added to admin, which is supposed to be a finance cost, or supposed to be a finance activity. It's a 40,000 pounds. This is where it's supposed to be 40,000 pounds. So penalty should be 40. It's a cost, so need to subtract. Again, that is no list. If there's a list, there's no list here. So now we are done. Let's go and copy the dividend. That is number maybe 3 to dividend. In calculating the dividend, so what is number 3? Dividend. Start with the opening balance of the retained earnings. Opening balance of the retained earnings. Let's go and pick the opening balance of the retained earnings. Opening balance of retained earnings. Well. Opening balance. Retained earnings. Show yourself. That's 2,620 to 2,620. That examine now. Profit after tax, anti-tax, or profit for the year. For the year. Now, when it comes to dividend paid, we follow the same. Let's also let's do something here. Profit after tax, that's the profit for the year. Profit for the year is 560. Good. Profit for the year is 560. So profit for the year is 560. Then, if the closing balance, there's a space right there to the bracket balancing figure. It's a balancing figure. Leave a space by the closing balance here of the retained earnings. What's the closing balance of the retained earnings? Let's go and pick it quickly. The closing balance of the retained earnings happen to be 2,880. Wow. Certificate is the same. Okay, that's not the BP. Okay, so 2,880. Fact. 880. Okay, so now add all. If I'm not getting this, the difference is what dividend paid during the year. Let's see. Now, dividend, there are 2 ways of dealing with dividend. Haruna, that's the second type of dealing with So when you check how now question, how I calculated or we calculated dividend together is a different style from this. So take notes. Okay, so what we get? Any answer for us? 300. Dividend paid is 300. So that's the difference. Balancing figure. Put it in bracket. Meaning that that should be 200. Okay, yes, it's true. Perfect. Perfectly. So let's go. I'm going to put it in. So dividend paid, let's go and put it here. Dividend paid, bracket, working number 3. Is that working number 3? Okay, well, that's my working number 3. You can confirm. Put a 300 here, negative. That is all. On our notes, we are done. Good. So, kindly copy the dividend workings. I'll take it off soon. Okay, so let me take these workings from here. Now I'm going to do the handbit. Okay, so add all. Let's get the net from financial activity. So net cash flow from financing activity. No subtracting it. 860, right? 860. Okay, so if it is 860, can you put it here? 860 negative or positive? 1,800 gone. That should be positive, right? Okay, so that's all. Now you underline it like this, and you're supposed to add these 3 figures: the net from operating, net plus net from investing, plus net from financing. But don't do that. Let's take a comprehensive insurance, okay? Follow the steps. Synergy, all attention here, even if you are sleeping, and wake up. This section. You can do this section first to score maximum of 3 solid marks free of charge. Now we're supposed to add these 3 net answers so that I can get a total. But let's see, we call it total cash flow for the year. I'll put dash there for the meantime. I'm not making any figure there because that figure, I want to take a comprehensive insurance. Pause carefully how I want to get that figure. All right, here cash and what? Cash equivalent balance brought down at the start of the year down to so much. When I add these 2 answers together, please, and please again, make sure that you get this section. It's very important. When I add the cash and cash supply at the start, plus the total cash flow for the year, it must give me cash and cash equivalents at the end. That's down. And that one is so much. However, these figures can be determined from the question that we have been. It's on the balance sheet. These 2 figures, they're on the balance sheet. So that means I can get these 2 figures free of charge from the balance sheet. And if I can get this, I can also get this free of charge. So let's go and pick them. And I hope we have gone through cash and cash equivalent, the composition. So when you go and pick them, select them carefully. So the bank balance. We only have a bank balance at the start. No cash. Let's see. There was a bank overdraft. Let's see. The overdraft is only for at the end. So the opening balance is 100. That means here should be 100. Positive. Let's go and pick the closing balance. Kindly check how we are picking the figures. The closing balance at the bank, there's nothing there, so dash. But there's a bank balance at the end of the period, which is 420. The bank balance is 420. So overdraft of 420. That's the closing overall. Now ask yourself, there's a figure here. If I add it to 100, I'll get 420. What's that figure? Tell us that figure. There's a figure here. If I add to this, I'll get 420 negative. What's that figure? Okay. So that figure is what? 520. Okay. Another agree. Another agree. 520 negative. Okay, I'll agree. It should be 520 negative like this. So it means that this question, if I add 1, 2, 3, I might get negative 520. If you add, you're not getting negative 520. Don't clean this answer now. We call it comprehensive insurance. Yes. If you add the net cash flow from operating activity plus investing and then plus the finance, it must give us the 520. So let's add and see. Even if you're not getting 520, I'm not changing the answer. That means there's either computation or somewhere that we need to just look at it. So let's add and see. Okay, so let's add together carefully. Net cash from operating activities happen to be 1,120. So 1,120. Investing is negative 2,500, so minus 2,500. Financing is positive 860, so plus 860. That is negative 520, which is the same as this, meaning that balance nicely for us. If there's no balance, can you don't change your answer? This answer, I call it a comprehensive insurance. It includes what? Third party, everything, everybody. If there's a mistake, maybe one of the figures made a mistake there, so it might affect this total. But because of this analysis, you've gotten it correct. On that note, we are done with the entire cash flow. I'll scan through the Haruna question with you, and then you go through. Good. So I'll scan some few questions, about 3 questions, and then you need to solve them for me, and I need to answer. Great. Now, if there's a closing balance for bank, you determine the cash and cash equivalent. Can we use the format that we determined? We said cash and cash equivalent is the addition of cash balance plus bank balance plus short-term deposit, short-term investments, less bank overdraft. So this is the format. So even if all of these are in there, can we add this, and subtract the bank overdraft? That is why before we started, we give a full version, like a wide range of the question that it may be asked in here. So can we take notes of this? So that is the cash flow. What is not gone through is the leases, a question where the lease. So can we scan through this particular question? There's a question in here where there's a lease. Let's go there and do just that question for me. That is not any question, but a question of let's see. Why? This particular question. That one have leases. I can see lease in there. I can see lease plans. Okay, so that's question number 8. So try and see if you are doing or not doing. Look for question 8 and look for question 3. Question 3. Let's go to question 3. Good, question 3 is in here. That's more limited. So question 3, more limited. So these are the trial ones. I have 2 extra ones. I'll scan them. I'll bring them right now before I close the chapter of the day. Make sure that you go through these lessons. Great. And can you try this example? Atom Limited. Atom Limited is also another interesting area. Have a lot of issues. There's prepaid, and then there's prepayment. So can you tell me how you can treat a prepayment? Okay. So can you take note of this particular? I'll make the question available. This is example 5. It's different from this material. Okay, now let's go and scan through Haruna. May 2017 question 3 ICAG. Great. This is 2017 May Haruna Limited. And it's almost in line with this particular question, example 5. Almost like that. Haruna is a bit okay, a bit detailed than that one. So that one too, can I go through? Good. Now, this is the section that I mentioned that a plan of 50,000 was purchased from credit. This was the issue that I was talking about, that the purchase, acquisition of credit add. Yeah. Kindly try this, even though the solution to this is in the comments, the video description section. Yes, this is Haruna. If you go down there, you see Haruna there to pick it up. So that is it. It's a nice, interesting question. Going for 20 solid marks. So kindly try it for me, it will be fine. If you're able to go through this and that work, when I've done this, the one I've just solved will be fine. Okay, so now we are going to end here. This is how far the good Lord will bring us. We'll end here. Kindly subscribe to the page if you have not done that, and also share to your friends. If you do have any question, kindly put the question in the comment section, or comment later, or kindly push it through our social media handles like the YouTube, email, Facebook, and then the WhatsApp. Okay. Great.